Hey guys, so welcome back to TradeUp's channel. So today I'll be showing to you several improvement of my liquidity trading strategy. So my strategy is based on the ICT trading strategy, but I have added some modification on it according to the way how I trade, according to the time frame that I am trading, and the schedule or the session that I am trading. This is gonna be an interesting content for today. So if you're interested, stay tuned, and please hit like and subscribe to my channel for future videos. So the idea of my strategy is really about hunting where are the liquidities in the market. Liquidities here in this price chart, because the liquidities, I believe that is the one which is fueling or triggering the big moves in the market. So basically, these are the where are the points where the smart money traders are entering their trades or exiting their trades. So I'll give you an example. So for example, we now focus on the Nash 100. Nash 100 is actually equivalent to US 100 in other platforms. And basically this is NASDAQ. Okay, so all right, so let's first explain my chart. So here, the pink color area or columns are Asian session, and the Asian session I just extended it until the by the way I'm using Central European time. So every time that I am telling to you is the Central European time. And if you are living in, let's say, New York, that should be -6 hours than my current time. If you are living in Philippines, then that should be +6. So just try to uh, find out what is the equivalent time compared to my Central European time. All right, so the column pink one is an Asian session. So normally I don't trade the Asian session. I just treat the Asian session as my initial balance for the day. Usually the Asian session is an accumulation phase, and it is followed by manipulation and distribution. So the power of three concepts trading strategy, which is taught by the ICT. So this is one of the main core of the strategy. So for instance, we have here Nash 100. We look at the high time frame. The high time frame, usually I just check what is the trend of the market in a higher time frame. So this is my higher time frame, 4 hours. And those order blocks or high and lows, or swing high, swing low are very important to me. So this one, swing high, it's very important to me. Swing low also very important. If it breaks the structure to the downside, then it means that we are now starting to change direction or trend. So usually it leaves with an order block. So after break up the structure or boss, the downside, so BOS, and I go to the origin of that move, which created the boss. So as you can see here, this is order block or with imbalance or market inefficiency was left behind. And aside from that, what happened is that we have here price liquidating first the high of this order block. or imbalance. So this is the high, and we have here some liquidation on the high. So, but what is interesting, as you can notice, is that if you mark this area where liquidation happened, you will notice that these are actually liquidity sweep, and these are really great entry points. So this is where I am entering my trades, here or here and here. And of course, since I don't trade the Asian session, I choose either the London session or the New York session. But I noticed that many times New York session is the one which entries are much better and the risk reward. So here, as you can see, this is the gray one is the US session, and here another US session entry opportunity. So after the liquidation, we now drop down with a big move and followed. So this is called the change of character. And in the change of character, you have here an entry opportunity here during the late US session. So the light colored areas with yellow border are my entries. So this is the way how I trade. So I hunt for those liquidity sweep and target those area as my entry. So also here, for example, for pound yen. So let's go to the higher time frame first. So we have here price trending upward and then change of character. And here we have a break of the structure to the downside, which has left the market inefficiency. So we extend that area to the right, and you will notice that here in this area, where we go to the 30 minutes, this is an area where the order block or imbalance was created, and now we went to the 30 minutes time frame. So now if we focus on this area, you will notice that you can draw some high over here. So here are the liquidation points, and those liquidation points, you will notice that those are really great entry points. So this is usually where I enter hunt for trades. So it means that what I'm doing is that, okay, just a moment, I need to find that symbol. Yes. So this area where the liquidity sweep is happening, I mark that area, and I always hunt that area for entries. So once the price touches that area, I now turn to 1 minute time frame and enter my trades. So 1 minute time frame. So I have a method for entering in a lower time frame. So this is an entry. This is another entry, late US session. But here it's also an entry, but I cannot enter here because it's an Asian session. So normally during Asian session, I am sleeping, so I cannot trade. And beside that, for me, there's no sense to trade the Asian session because the liquidity there is really low. The best session are London and the US session. So yeah, so this is my strategy. So let's look at some other pairs. So let's check the US oil, and you will notice the same behavior. So we have here an uptrending chart. Oil has been bouncing off from demand zone since June. So if you recall that we have some increase in oil price since December of last year, January, and then it dropped a little bit, but then we found a support level over here and price is bouncing from that. So we now watch these areas, this level, how the price will behave on that and this one. So these are next significant points where the price of oil can go. So it can come here and then drop again to the demand zone, or it can go higher and then try to liquidate those shorts here. And the possibility is really too much. Go higher and retest this area here. So these are just, scenarios. You cannot really predict where it is going, but what I used to do is really to identify those significant levels and understand how the price is reacting on those significant levels and take my trade entries accordingly. So now let's go to the lower time frame. So as you can see in the lower time frame, the oil has been uptrending, and let's see here, uptrending, we break the structure. We usually, oil usually liquidates those, it's called, this level are called inducement. So inducement is the level where the price originated to create the break of the structure. Usually when the price is pulling back, it liquidates also those who entered trade here, and then try to look for the next fair value gap, which is this one. And that is my entry. So here are entry points, and sell it at the swing high as a target. So another one. So here there is a break of the structure over in this candle, and then price is pulling back to liquidate those long trades which were entered on this inducement level, and then it's offering a long entry. So after the market inducement here, it's actually usually going to the next order block. So these are really one of my A+ setup, that it creates a liquidity sweep on the inducement levels, and then price drops to the order block to pick up orders. So this is the best entry points here. So it's not always 100%, but there is a very high probability that the prices are bouncing on those levels. So you will notice it many times also here. So here, price break the structure and then liquidates the inducement level, hunt for the next fair value gap, and offers an entry opportunity. But this one is Asian session, so I won't be able to enter. So you see also during this US session, it's a consolidation, so accumulation phase. What price does is to manipulate the those who are manipulate. So it lets you believe that the price is now starting to move higher, but then it will come back to liquidate those people who have their stop losses below the low of the accumulation phase. So these are the best entries here, high probability entries. So if you go to the lower time frame, you can probably spot some order block over here. See? So here, and then the entries here, what time, what session, US session. Then it offered us a very nice risk to reward trades, and it still continued during the next Asian session of the next day. So these are the kind of strategy that I'm using, and I really can prove that these are very, very high probability type of setups. If you focus only on this kind of behaviors and setups, and you focus only on those and fine-tune yourself, you will understand that trading becomes much more easier, and you start to become more confident in your trading strategy. So I don't look for other type of strategy. I focus on this because this is the one which I believe has really a high possibility to give me higher win rate and higher profits. So I pass many challenges, evaluation phase in the platform challenge. I passed a lot from this kind of strategy. Even yesterday I passed another challenge within 2 days only. The other week there is another challenge that I passed also within 4 days. So, okay, so if you want to learn more about the strategy that I am using, feel free to write me a message, and I have a mentorship program that I am offering. And not only that, actually, good thing is that I am able to evaluate whether this strategy can be used in option trading. So option trading is where I go for big stocks or index in the US market, and can try to use the same strategy for entering option trades. For example, I'll give you an example here. So for instance, with this trade here, you have a break of the structure. Let's turn into Heikinashi, because Heikinashi is not is filling up those gaps in the chart. So the Heikinashi is like turning your stock market chart into a Forex market chart that having no gaps in the technical chart. So the same way how we interpret, we have break of the structure, and the break of the structure is leaving us some imbalance or inefficiency in the market, and usually price is bouncing off on those areas where there is market inefficiency. So what does it mean? So if you are able to spot those and you know that the general trend is up, you do this simple strategy. Wait for the break of the structure and wait for the price to come back to the order block or fair value gaps. So what I do is that I have identified that this is the area, and this is the lowest area of the order block. It means that in option trading, I can sell put 126. So I usually sell put with the strike price of 126, where I receive a credit receipt. So let's say, for example, I receive a $3.0 credit per lot or per contract. $3 credit means times 100. That's a $300 credit in reality. And then to protect myself from I think there is no 126 strike, so let's make it 125. 125. So I received $3 credit, and then I buy another put, which is 5 points lower than the 125 put. So here I'm going to buy put 120 strike. So let's say, of course, if you are buying now, it's a debit, so you are giving back some money, but this will be cheaper. So let's say, for example, this is a $100, cost you. So the total credit that you will get is that the 300 here minus the 100 here. So that will be a total of net 2.0 credit, which is equivalent to $200 in money. So this $200 will be credited in my account, and then if the price stays above here, even if it will just don't move, stay stagnant, as long as it is above 125 after 1 month, the best will be if it is going away and away, because for sure the credit, the option here will be worthless, which means that I will get 100% of the 200. So, but if you stay patient within a month, so even without checking it, you just check whenever the price is hitting the 125, then you are good. That $200 will be like effortless. And of course, this is only one trade. You can, let's say, establish 5 different trades. So in 1 month, you can really get $1,000 for that. So like minimum capital for this type of account size will be like $3,000 to $4,000 as your initial capital. So not much, right? And then you are getting this kind of profitability. So another interesting thing with option is that you can achieve 100% of this maximum gains even within 1 or 2 weeks, and that happens whenever this market will suddenly rally within a short period of time, because in that case the puts will become worthless within a short period. So, but the maximum amount, so if maximum amount that maximum time that you need to wait is depending on how long is the expiry of your option trade. So there are options that are expiring in the same day. So this is called 0 DTE. There are options that are expiring within a week. Some can be 2 weeks, 3 weeks, and 1 month, or even more. So, but usually, if I'm trading with 4 hours, it's a 1 month before expiry option trade. And I could prove that these are really high probability trades. And I'm using the smart money liquidity trading concepts. So let's take a look at other examples. So for example, here we have here a break of the structure, and we know that there are some liquidity sweep first, and then you find another order block below it. So this is where we believe that the price can bounce. So, but for safety's sake, we can put here the sold put a little bit away from that area. And so let's say we sell the 80 put and we buy, let's say, $3 away. 80, so 77 put as a protection. So yeah, so if you would like to learn this kind of option trading, please write me a message, because I also have a Forex mentorship and an option trading mentorship. Or if you would like to just focus on stock market, I can also teach you, because the strategy that I'm using is applicable to any kind of market, even crypto as well. Right, so guys, thank you very much for tuning in, and let's watch out for my next YouTube live.